Well, let's move on. Let's get our first corporate on the show. REC, that's the first corporate. Well, in terms of news, the company will be providing close to 3,000 crores financial assistance to Bangalore Metro Rail Corporation for their phase 2. Mr. Vivek Kumar, the chairman and managing director at REC, joins us on the show to let us know more about this development as well as how is the year shaping up. Well, good morning, sir. Thanks so much for speaking to us here at CNBC-TV18. Well, you're looking at various financing options, so give us some clarity. We're close to a quarter into this year. What is the AUM growth you're looking at and the targeted NIMs as well for FY24? Now, in quarter 4, FY23, the NIMs had fallen to around 3.3%. That was a disappointment, but your indications were that it will improve from here on. So give us both those two numbers.
Our administrative ministry, that is Ministry of Power, has allowed us to diversify into non-power sector, infrastructure and logistics. Keeping this business strategy, we are pursuing this infrastructure and logistics sector. And government has allowed us that 1/3 of our loan book could be from the non-power infrastructure and logistics. Keeping that in the perspective, last year we had sanctioned Mumbai Metro projects, MMRDA, for about 16,000 crore. Recently, our board has approved financing of Bangalore Metro Rail Corporation for extension of 2 corridors of the phase 1, that is East-West corridor and North-South corridor. And we are also taking up 2 new lines. This is definitely going to improve the connectivity and decongest traffic in the most populous portion of the Bangalore city.
Okay, all right. So that's good news, sir. Yes, go ahead.
You also asked about this, our asset under management and net interest margin. Let me first take up this net interest margin. Last year, our net interest margin was about 3.38%, which is quite good as per industry standard. But however, 1/3 of our borrowings are at market floating interest rate. And as you are aware, the last year, this interest had gone up. That's why our net interest margin were affected. But going forward, now we expect that borrowing cost will go down and our net interest margin will improve. With regard to our asset under management, our total outstanding loan as on 31st March 2023 was about 4,35,000 crore, which was a significant improvement of 13% on year-on-year basis over the last year. And going forward, we are targeting to take up infrastructure projects as well as energy transition initiatives. And the next 7 years, by the year 2030, we are targeting that our loan book will increase to about 10 lakh crore.
All right. You know, we have got the broader time horizon, sir, but in the near term, you said NIMs will improve. What will they improve to? Point number 1. And AUM growth from this 4.35 lakh crore, where does it head in FY24?
Yeah, in FY24, we are targeting that it will at least touch 4,80,000 crore.
Okay.
And net interest margin will also improve, but it will depend on how the borrowing costs are going down.
Mr. Kumar, good morning. Prashant here. This 10 lakh crore number, this is PFC, REC both, right? By 2030.
No,
this is only REC.
It is only REC.
Okay.
REC's loan book is 4,35,000 crore as on 31st March 2023. And we are targeting by the year 2030, next 7 years, our loan book will grow up to about 10 lakh crore.
Got it. This, the non-power, the exposure which you're allowed to go up to 1/3, where does it stand now? Are you, do you have enough room there?
Yes. Last year, we had sanctioned, total project cost was about 2,68,000 crore. Out of that, about 85,000 crore was in infrastructure and logistics sector. But as you know that after sanctioning, the disbursement of loan takes some time. Our total disbursement of loan last year was about 96,000 crore.
Right. No, I'm saying as a total as a percentage of AUM, where does the non-power portfolio stand at?
Right now, the percentage is small. Out of 4,35,000, it is about 1% only.
Okay.
But it will grow in the near future.
So that's where bulk of the growth will come from on the way to this 10 lakh crore number that you spoke about. The
bulk of this growth will come from energy transition initiative. Right now, Government of India has announced that they are targeting about 500 gigawatt from installed capacity from non-fossil fuel sources. That will entail an investment about minimum 15 lakh crore in next 7 years. And we are targeting about 20% of that market share. So we are targeting that for green projects will be financed roughly about 3 lakh crore in the next 7 years.
So do you think by 2030, which is when you will have an AUM of 10 lakh crore, your infrastructure, logistics or non-power exposure can hit that upper limit of 30%?
Yes.
Or do you think... Okay, got that. And currently it's only at 1%?
Yes.
And what are the margins, sir, that you enjoy on power versus non-power or spreads?
We are giving very competitive margin in infrastructure, but conventional generation, these margins are same as that of the non-power infrastructure sector.
Okay, so in 2030, what would your NIMs look like? Just want to understand structurally, as your non-power exposure goes up from current 1% all the way up to 30%, will this provide a margin tailwind for you, or will this depress margins?
It will increase our margin. NIMs will increase to be more than 3.5%.
Okay,
all right.
And so how is asset quality for you right now?
Asset quality has improved quite substantially, particularly the green project that we are targeting. We are emphasizing on the asset quality. Our net NPA has come down to about 1.01% in the last financial year, and we were able to resolve about 6 NPA projects amounting to about 4,800 crore. In the current financial year also, we are planning to resolve about 9 stressed assets amounting to about 7,000 to 8,000 crore. And we intend to become net NPA zero company by the end of 2 years, by say 2025.
Oh, okay. All right. So what, the outstanding dues of discoms, they have come down by around 30% the last 1 year or so. This is since the Power Ministry has introduced LPS rule. That's the late payment surcharge. I think the number has come down from around 1.38 lakh crore to around 93,000. That's as of May. Could you give us an updated number? And how do you see the trajectory going ahead? It's already come down by 32%. Do you see it coming down further?
Yes. This late payment surcharge scheme brought by Ministry of Power is a path-breaking reform initiative. And this discom dues will be reduced to zero by the year 2026. As you have already pointed out that this has been reduction about 30% in the discom dues. And by the end of FY24, this discom dues will go down by about 40-45%, about 50%.
So, just a quick point on the power segment itself. You spoke about energy transition, where there will be a lot of spending which will be required. You said you will spend about you will plan to lend about 3 lakh crores, right?
Yes.
Towards that over the next many years. There was an approach paper by CERC which was put out recently for the next couple of years for the power sector, power tariff resets, etc. Some have suggested that there is, plan to revive old power projects, increasing the life of those thermal power projects, basically. So, is this, the plan the plan for the mix between renewable and non-renewable? Is that still is that set, or is that still work in progress according to you? There is also some talk that we may require new thermal power plants, large thermal power plants, because we are going from power surplus to power deficits, as we saw last year, as we saw the year before last also during the summer season. So just wanted to understand the thinking on the thermal sector from here on.
Okay. As you are aware that renewable energy is intermittent in nature. In order to ensure grid stability, we need base load that is basically coming from the coal-based thermal power plants. Going forward, as the share of renewable will increase in the total energy mix, will still require coal-based thermal power plants, but will have to have flexible operation of coal-based thermal power plant. Right now, the technical minimum of coal-based power plant is about 55%. If the share of renewable in the energy mix increases, we'll have to further reduce this technical minimum to say about 40%. The flexible operation of coal-based power plant is going to play a big role. As coal-based power plants are providing base load, will still require about 51,000 megawatt in the next 4 to 5 years from coal-based new power plants, which are basically coming in the brownfield projects.
Brownfield projects, I mean, basically existing expansions and extension of life of existing assets, right? So, got it. We'll leave it there, sir. Thank you very much for joining us. And the market's very excited that power financiers will do very well as some of the trends that you highlighted play out over the next many years. The energy transition, renewables is a big one, where there's going to be a lot of lending which will be required. And of course, the existing thermal capacity will also be put to use, as you explained. 157 on REC, stocks about 0.5% higher. We'll take a very quick break here. We'll be joined by the management of 5-Star Business Finance to discuss the outlook. That's another one where there's a fair bit of interest as far as markets go. A little later after that, we'll have the management of Bharat Dynamics to discuss the impact of the government's defense indigenization push and, of course, what trends are for their order book and revenue trends.